Understanding Stock Market Investments, a step-by-step guide. Investing in the stock market is one of the most popular ways to grow your wealth over time. However, it can seem intimidating at first, especially for beginners. If you've ever wondered how the stock market works, or how to get started with investing, you've come to the right place. In this video, we will guide you step by step through the process of understanding stock market investments. By the end of this video, you'll have a clear understanding of how to start investing and how to make informed decisions that can help you build long-term wealth. Stay with us till the end to get some practical tips on how to get started today. 1. What is the stock market? At its core, the stock market is a marketplace where individuals and institutions can buy and sell shares of publicly listed companies. When you purchase a share of stock, you are essentially buying a small ownership stake in a company. This gives you the potential to profit as the company grows and increases in value over time. The stock market allows companies to raise capital, money, by selling shares to the public, which they can then use to fund their operations, expand, or invest in new projects. Investors, in turn, have the opportunity to share in the company's success by holding its stocks. 2. How the stock market works. To understand stock market investments, it's important to first grasp how the market operates. Stock exchanges. Stocks are bought and sold on stock exchanges, which are centralized markets. Some of the most well-known stock exchanges include the New York Stock Exchange, NYSE, the largest stock exchange in the world. Nasdaq, known for its focus on technology companies like Apple, Google, and Facebook. London Stock Exchange, LSE, one of the oldest and largest stock exchanges outside of the US. When a company wants to go public and sell shares of its stock, it lists its shares on an exchange through a process called the Initial Public Offering, IPO. Stock price. The price of a stock represents how much investors are willing to pay for a share of that company at any given time. Stock prices fluctuate throughout the day based on factors like company performance, market conditions, investor sentiment, and global events. Brokers and trading platforms. To buy and sell stocks, you need to use a broker, a company or platform that facilitates the buying and selling of stocks. In today's world, many brokers are online platforms that allow you to place orders quickly and easily. Some popular brokers include Robinhood, Fidelity, E*TRADE, Charles Schwab. These platforms often charge small commissions or fees for executing trades, although some have eliminated commissions entirely for certain trades. 3 types of stock market investments. There are a few different types of stock market investments, each with its own set of characteristics. Individual stocks. When you buy individual stocks, you are purchasing shares in specific companies. The value of these stocks depends on the performance of that particular company. For example, if you buy shares in Apple, you're betting on the growth and success of Apple as a company. Pros. Potential for high returns if the company does well. Direct ownership of the company. Cons. Higher risk, especially if the company underperforms. Requires research and monitoring of the company's performance. Exchange-traded funds, ETFs. An ETF is a fund that holds a basket of stocks, or other assets like bonds, and trades on the stock exchange like a single stock. ETFs provide diversification, meaning you can invest in a variety of companies or sectors at once without having to pick individual stocks. Pros. Diversification reduces risk. Lower cost than mutual funds in most cases. Easy to buy and sell on the stock exchange. Cons. Limited potential for high returns compared to individual stocks. You don't have control over the exact companies within the ETF. Mutual funds. Mutual funds are similar to ETFs in that they hold a collection of stocks or bonds, but they are managed by a fund manager. Unlike ETFs, mutual funds are not traded on exchanges and can only be bought or sold at the end of the trading day. Pros. Professionally managed portfolio of stocks. Diversification reduces risk. Cons. Higher fees than ETFs. Less flexibility since you can only buy or sell at the end of the trading day. Dividend stocks. Some stocks pay dividends, which are cash payments to shareholders as a portion of the company's earnings. These can be attractive for investors looking for passive income. Pros: steady income stream from dividends. Less volatile than growth stocks. Cons: dividend-paying stocks may not grow as quickly as growth stocks. Not all companies pay dividends, especially growth-focused companies. For the risks of stock market investments. Investing in the stock market can offer high returns, but it also comes with risks. The value of stocks can fluctuate daily, and there's no guarantee that your investment will grow. Here are some common risks. Market risk. This refers to the risk that the overall market may go down, affecting all stocks. This can happen due to factors like economic downturns, changes in interest rates, or geopolitical events. Company-specific risk. This risk relates to a particular company's performance. If the company faces financial problems, scandals, or poor management, the value of its stock may decrease. Volatility. Stock prices can be very volatile, especially in the short term. This means the value of your investments can fluctuate significantly on a daily or weekly basis. Liquidity risk. Some stocks may not have enough buyers or sellers at any given time, making it difficult to sell your shares quickly or at a favorable price. 5. How to get started with stock market investing. Now that you understand the basics of stock market investments, let's talk about how to get started. 1. Set your financial goals before you start investing. It's important to understand why you're investing and what your goals are. Are you saving for retirement? Do you want to build wealth over the long term? Or are you looking for short-term gains? Setting clear financial goals will help you determine the right type of investments for your situation. 2. Choose a brokerage account to invest in the stock market. You'll need to open a brokerage account. There are several online brokers to choose from, and most have easy-to-use platforms. Some brokers even offer educational resources to help beginners understand the market. Once you've chosen a broker, you'll need to fund your account by depositing money from your bank account. 3. Decide how much to invest. Deciding how much money to invest is one of the most important steps. A good rule of thumb is to only invest money that you don't need in the short term. Stock market investments should be viewed as long-term investments. You should also ensure that you have an emergency fund in place, so you don't have to sell your investments in case of a financial emergency. 4. Start small and diversify. As a beginner, it's a good idea to start with small amounts of money and gradually increase your investments as you become more comfortable. Additionally, remember to diversify your portfolio by investing in a mix of individual stocks, ETFs, or mutual funds. This way, you reduce the risk of putting all your money into one stock or sector. 5. Monitor your investments. Once you've made your investments, it's important to keep track of how they're performing. This doesn't mean you need to check your portfolio every day, but it's a good idea to review it regularly and make adjustments if necessary. If your goals or risk tolerance change, you may need to rebalance your portfolio. Final thoughts. The stock market is an exciting and potentially profitable way to grow your wealth, but it's important to approach it with knowledge and a strategy. Understanding the basics of stocks, how they work, and the different types of investments will give you a solid foundation to build on. Remember, investing in stocks involves risk, and there will be ups and downs. The key is to stay patient, diversify your investments, and think long-term. By starting small, setting clear goals, and making informed decisions, you can build a strong stock market portfolio that will help you achieve financial success. If you found this video helpful, don't forget to hit the like button, share it with friends, and subscribe to our channel for more helpful investing tips and guides.